reconciliation statement. Bank reconciliation statement. Anytime we use the word reconciliation, even in English language, it means that you are trying to settle something. That is the meaning of reconciliation. When you try to settle, it's possible that two people are loggerhead and you are trying to reconcile them. That is the only time we use the word reconciliation. Now, in accounting, are we not saying that two people or something, or there are disagreements between or among some transactions? And that is why we now decide to use the word reconciliation here. Yes, there is disagreement between Mr. Cashbook, I refer to Mr. Cashbook, and Mr. Bank statement. Bank statement. Mr. Cashbook and Mr. Bank statement. Now, you keep your cashbook in your workplace, in your office, and your cashbook, as we have discussed in the time past, shows what comes into your cash and your payment out of your cash. That is what your cashbook shows. Now, there are some times you also lodge money from your cashbook in your bank account. And there are some times also you can withdraw from your from your bank account into your cash book in the office. Now, the position that we always find ourselves in most cases is the balance you have in your cash book in the office is not always the same with the balance you have in your bank statements. Like, take for instance, if you have prepared your cash book and the total balance CD you are having in that cash book is 2 million naira, and you ask your account officer to go to the bank to check the balance you are having, though you must give an instruction to the bank. Either you write a letter through the account officer, or you instruct your account officer in the bank that the cashier can collect your statement on your behalf. That is when the bank can release the statement to the person. Now, if you get to the bank and eventually the statement was actually brought from the bank to the office, and you just got that you're having 1.8, the first question you ask is why? I'm supposed to be having 2 million, but I have 1.8. The first question is why? And there's no need for us to now reconcile the difference between the bank statement, this is the bank statement, and my cash book. And to reconcile the two, we need to prepare what we refer to as a bank reconciliation statement. From my explanation, we cannot simply say that bank reconciliation is the statement that is used to agree the difference between the cash book and the bank statement. It's a statement used to make the balance you have in the cash book and the balance you have in the bank statement to be the same. And that is the meaning of bank reconciliation statement. Now, the next question we need to now ask ourselves quickly is, why do we have this difference? Why do we have this difference between the cash book and the bank statement? And that's what will lead us to reason for discrepancies between cash book and bank statement. The reason between the cash book and bank statement. Number one, we have what we refer to as unpresented checks. Unpresented checks. And what do you mean by unpresented checks? They are checks that the owner of the account has issued out, but the receiver is yet to present it in the bank. There are checks that the owner of the account has issued out of his cash book, but the receiver or the recipient of the check has not presented the check to the bank for payment. Do you know the implication of that? The implication of that is that you will have credited that check in your cash book, and in the bank statement you will not see it there. It's supposed to be on the debit side of your bank statement, and that is why you need to quickly note this, that whatever you credit in your cash book must be debited in your bank statement, and whatever you debit in your cash book must be credited in the bank statement. Please have that knowledge in memory. Now, I said all presented checks. How will this one cause a difference? It will have been credited in the cash book and not debited in the bank statement. So that's how it will cause a difference. Now, this is the format of the bank statement. This is the format of the bank statement. For instance, we have the dates, we have the particulars or detail, we have the debit, we have the credit, we have the balance. Then the name of the bank will be here, the logo will be here, maybe the account number, likes will be there. But the main thing that happened in the bank statement is that the money that comes in into your account will be on the credit side. Let's assume Mr. A paid ₦1 million into your account. Then the ₦1 million will be on the credit side, and your balance will also be ₦1 million. Mr. T paid ₦2 million. It will be on the credit side, and your balance will now be what? 3 million. Let's assume you now pay for rent, and rent is ₦1 million. You debit it on the debit side of the bank statement, then your balance here will be what? 2 million. That is how your bank statement operates. Now, please note that in your cash book, whatever comes to the credit side, this is your cash book. Whatever comes to the credit side must be on the debit side of the cash book. Mr. A here is having Mr. A. There's ₦1 million in lodged in the account, while Mr. B or Mr. T lodged ₦2 million. Then you pay for rent of ₦1 million. So in this account, you should be having the balance of what? ₦2 million, just like this. Now, let's now assume now unpresented checks. You have given a check of ₦1 million to Mrs. B. ₦1 million to Mrs. B. In your own cash book, you have credited it out. So you write ₦1 million here, but Mrs. B did not present that check to the bank, meaning that it will not show in the bank statement. So if you now balance this one up, let's assume this is 3 million, this also should give us 3 million, but if you look at this, total here is 2 million. So 2 million, 3 million minus 2 million will give us what? 1 million as what? As balance CD. But what balance do we have in the bank statement? 2 million. There's no problem when you have money in your bank statement than expected. People always put smile on. You love that one. But where you have issue is you are supposed to have 10 million naira in your account, and you now meet like 8 million naira there. You ask question why. So that is the effect of unpresented checks. Unpresented checks. So we are looking at the causes of difference between the bank statement and the cash book. Number 2 is uncredited checks. And what's the meaning of uncredited checks? They are checks that have been lodged in the bank, but the bank are yet to credit it. So they form uncredited checks. It has been lodged in the bank, but the banks are yet to credit it. Somebody may ask quickly that, why is it that we lodge a check in the bank and the bank will not credit it? There are a lot of reasons. Number 1, it may be network issue. Where you don't have network to post that transaction, then it cannot be in that person's account. Then another reason is where the source document has been misplaced. And what's the source document here now? That is the check. You can only post what you have, but what you don't have, you cannot post it. That's another reason why it is possible you lodge a check in the bank and the bank are yet to credit the check. So, and that forms uncredited checks. Now, how will this one cause a difference? Because there was a time the examiner asked that question, that you should list the reasons why we have differences between the cash book and the bank statement. And in addition, they now ask, how will that one cause a difference? And the language you only use there will be debiting and crediting. Like take for instance, in the unpresented checks I gave as number 1, unpresented checks I gave as number 1 reason for the differences between the cash book and bank statement. I said that this unpresented check will have been credited in the cash book but not debited in the bank statement, so it will cause a difference. But for uncredited checks is the opposite. This will have been debited in the cash book but not credited in the bank statement. It will cause a difference. Point number 3. Please always note these differences. What causes differences? Because the examiner can just ask you to just list them. What causes differences? Point number 3 is what we refer to as bank charges. Bank charges. Say for instance, in the cash book we don't have bank charges, but in the bank statement you must have bank charges, and it is the system that will deduct those charges. So you may not know what the system will deduct. You may not know, and that is why you see a lot of bank charges in the bank statement and they are not in the cash book. But when you are doing reconciliation, you reconcile that. It's possible examiner ask you examples of bank charges, because we only know the common name of bank charges, but so many students preparing for exam did not really know the analysis or the composition of bank charges. I will give you some. 1. VAT is an example of bank charges. 1 is an example of what? Bank charges. That is number 1. What is VAT? Value added tax. That is number 1. That is causing difference between the cash book and the bank statement. The second one is checkbook charges. Checkbook charges. Yes, the charges, if you exhaust your checkbook, that's what we use to withdraw money from the bank. If you exhaust the checkbook, then you apply for new one in the bank, and the bank will charge you. They will charge you. Another example of bank charges is the alert charges, either debit alert or credit alert. So many of you receive alerts on your phone, but the bank will debit your account for such alert that you are receiving. I will do now. Then aside this also, we also have interest on loan. Interest on loan. If there is anyone that has borrowed money from the bank, then the bank will charge interest. And that interest is part of the bank charges we were talking about. Another one is the ATM cards. ATM cards. We also have maintenance charges from the bank. All these are good examples of what? Of bank charges. We have looked at unpresented checks as one of the reasons that cause difference between the cash book and the bank statement. We have looked at uncredited checks. We have looked at bank charges. Let's move to the next one, which is number 4. We call it standing order. Standing order. Standing order. What is standing order? Is a standing instruction or is an instruction given to the bank by their customer to make some certain amount of money on their behalf, either monthly, quarterly, or yearly. And that happens where somebody is not going to be within the country. He can just instruct his bank to be paying his children's school fees every time or every year. And the bank will just be paid on his behalf. And it's possible he has forgotten that he has given such instruction. So he'll be wondering what happened. And later he will not get to know that it was the instruction given to the bank that the bank was carrying out. You can also pay insurance policy fee through standing order. So standing order is an instruction, a standing instruction, a fixed instruction given by the owner of the account to the bank to make some certain payment on their behalf. And definitely there are going to be forms the owner of the account will fill that will give an instruction to the bank for bank to begin to debit such fee. Apart from standing order, bank charges, uncredited checks, and unpresented checks as explained. We also have another reason, number 5, that is dishonored checks. Dishonored checks. Please, question comes out here, even in business law and FA, there is a particular question they asked before and they can ask again. What is dishonored check? That is when the bank returns the customer's check. When the bank returns the customer checks, it becomes dishonored check. Sometimes they call it bounce check. You get it now? Dishonored check or bounce check. Now, very important. Examiner can ask you, why will a bank dishonor customers' check? Because normally, bank is not supposed to refuse payment from the customer's account. Anytime you present check to the bank, if you check the instruction, it says pay. So bank is supposed to pay. But why is it that in some cases, bank return the check of the customer? There was a particular diet they asked students to list 10 reasons why bank can return a check. And I want us to quickly do that now. 10 reasons. To list them one after the other. 10 reasons is, but one is why bank will return the check is when you have insufficient funds. Insufficient funds. Insufficient fund in the account. You know you don't have money and you give somebody check to go and collect money. That is bad. Insufficient fund in the account. The bank will return the check. Number 2, irregular signature. Irregular signature. So when you are signing, it must be the signature you have your mandate card. If the signature is different from the one you have in their system, they will return that check. Post-dated check. Number 3, post-dated. Post-dated check. Please listen. If somebody wants to dupe you, the person wants to give you money and they want to run away, he can give you a check and post-date it. Today is what? Today is 7th. And he will now put the date of 10 or 20. If you take the check to bank tomorrow, bank will return the check. He will ask you to come at that exact date. So when you post-date a check, bank will not accept it from you. Another reason, which is number 4, is amount in words. Amount in words different from amount in figure. You write amount in words and it's different from amount in figure, then the bank will return that kind of check. Number 5. Also we have a fake check. There are some check that is fake. Are you with me? Check that is fake. Then number 6, we have stale check. Stale check. Stale check. What is stale check? Please note this. A stale check is a check that you are holding for a period of 6 months. Please note that for objective sake. A period of 6 months. When anybody give you a check and you hold that check for 6 months, you don't present the check, and the check after 6 months will become a stale. Better if you go to bank to now present after 6 months, the bank will reject it. They won't give it to you. They won't give you the cash value that is there. Are you with me that they won't give you? Alteration on the check. Number 7, alteration. Alteration on the check. Alteration. If you alter anything on the check, the bank will reject it. Alteration on the check, the bank will do what? Will reject such check. They will not accept such check from you. Alteration on the check. Number 8, where we have freeze account. This one occur more among the politicians. Freeze account. You know, when they are in power and they want to be power, they can just freeze the account. That means if you now take a check to the bank and say you want to collect money from that account, they will tell you that you cannot access the account because the account is what? Is freeze. Freeze account. You cannot collect money from there. I will do that. Freeze account. So, if number 9, you have a mutilated check. Mutilated. It's not it. Just put different kind of thing on the check. Are you with me? The bank will reject such a check. I want you to think of one more reason. Yourself. I will not complete to be 10. This is 9 and 10. Anyway, so think of one more reason. After that, think of one more reason that you write.